Morning, everybody. It's the 2nd of August. We're Signal Centre talking ball. I'm Joe Neighbour, joined by Steve O'Hare. Morning, Steve.
Morning, mate.
We're all merched up today. Look.
Yeah. Oh, yeah. Look at that.
Yeah.
Got the old branding on there. Try not
Oh,
to
wrong one.
sort of cover that. Yeah.
Yeah. Wrong logo.
Yeah. I'm going to be sort of they're quite nice, comfortable tops.
Yeah, they're right. They'll
So
do, won't they? We should start
yeah,
selling them for our 6 viewers.
or giving them away for the
Can't give them away.
view. I've got like coffee cups, little Signal Centre coffee cups. So the first person to ask a question today, we'll send you a coffee cup.
Yeah.
Obviously, we'll
Sounds like a
reverse
fair
charges on the sort of like I'm not paying for postage as well.
Yeah, brilliant.
So Connor's
Okay.
birthday today. Connor's 21. Happy
Happy birthday,
Connor
Connor.
Bear.
21.
Yeah, I know. 21 years ago. My little baby is 21. So
Wow.
I've done my job. I've got them all past the age of 21. So I
Yeah.
think that's me done now. I could just
Yeah, you can just kick
retire.
back now. Yeah, absolutely. If only the cost stopped then, eh?
Oh, yeah. Tell me about it.
Okay, right. So let's get cracking with what happened over the weekend. So obviously, this situation with China is still ongoing. The securities regulator has called for more communication with its American counterparts after the US Securities and Exchange Commission increased disclosure requirements for initial public offerings of Chinese companies. So obviously, still issues ongoing there. In the UK, the Chancellor Rishi Sunak has urged an easing of UK travel restrictions. He said it's damaging the country's tourism industry and the overall economy. In France, tourism is rebounding versus last year when the pandemic shut the borders, with 50 million foreign tourists expected this summer. That's good. What else? We've got Bitcoin back below 40,000 after it climbed over that level at the weekend to reach its highest level since May. Analysts blame profit taking following the recent rally as the reason for the decline. We'll come onto the charts shortly and give it our own view. That's pretty much it, I think, on the news front. So let's get stuck into some charts, shall we, Steve?
Yeah, why not?
Where do you want to start today?
Well, I'll dive into cryptos as we were talking about that. Dive into Bitcoin because obviously it is quite a decent resistant level we're talking about. We can see on this is the weekly chart first of all. So on a weekly basis, we didn't manage to close above the 40,900 level, which I see as the main resistance. We did spike above it though. The high we got on, I think it was Friday night, 42,614. So a little poke head above the parapet and then smack back down again. So on a daily basis, it doesn't look great, to be honest. It's you get this bullish move up. I think we can probably count 9 candles there, which is the norm. Or the most it ever does, but not all the time. And then we had this reversal on the Saturday, and then this was followed with a spike higher. So it was the highest level we've been to since way back in May, and then a full rejection of it. So we're still hanging around the 40,000 level. So there is a potential for another retest, but momentum is stalling, and I'd be a bit concerned because on the 4-hour chart we're back below the cloud. And also when you get things like this, you get spike higher here and a spike higher here, then you have a neckline, which is the low. It gets in between those two levels. Once it breaks that neckline, you normally get the move down. This is like a double top formation, equals that. So what did it do? Yeah, pretty much this was the measured move target of that double top formation. So it played out really nicely there. We got sort of like volume picking up. You can see the volume picking up in this area when it sells through the cloud. So yeah, looks pretty negative. Ethereum didn't really do the same. We can see that sort of like the May highs that the Bitcoin breached weren't breached by Ethereum. That's still a little bit under pressure, but it's a couple of weeks of very positive price action, so not too bad at all. The on the daily chart yesterday was a shooting star candle. So really important for price action in cryptocurrencies to continue this firm footing. Otherwise, there is a danger that prices will capitulate back into the ranges that we've seen. Resistance at 79 on Ripple hasn't been breached, and Cardano, it's just got above the resistance at 134. So, well, 130 is the resistance, trading at 134 now. So that's cryptos. Let's jump to commodities. Oil, schmoil, a little bit of a, if you look at the 4-hour chart, a little bit of a head and shoulders formation here. Really key. We're in the 4-hour Ichimoku cloud, volumes dropping off a little bit. And if we manage to get down below the 72.25 level, then I think we are in for another retest of price action, maybe going towards the $70 area even. Little bit negative on that. On the daily chart, we can see indecision from Friday and this bearish engulfing candle forming today. So a lower close today, and that will indicate to me that we are probably going to get a retest of the $70 area. Gold is potential for a double top formation as well. We've got the high from the 15th of July, and we've got the high from Friday. And this neckline in between is coming in at 1790. So that's the level to watch. For me, it does feel like gold is a little bit capped at the moment, up at this 1730 to 35 area. Really hasn't got the momentum to take it through. Momentum is slowing down now. So I'm really a little bit short term, I'm a little bit bearish. Obviously, medium long term, I still believe in gold and still think we're going to be moving up. You know, in the coming months, maybe into next year, up towards the 2,500 area at least. So yeah, but potential for a retracement in the meantime. And we know that we've got the 1790 level, then we've got the 1750 support before the major support comes in just around about 1675 to 1680. So that's the levels to watch there. Taking a look at indices now. What's going on here? Again, it continues to inspire me. The indices, how resilient they are to everything. They keep bouncing back. It's always feels like, oh, there's a little bit of selling pressure here, and then bang, bounces back up again. So we're getting support in the FTSE that comes in at the 6,800 level. That's the major support. Interim support comes in just around the 6,950 level, and resistance wise, we do have a little bit of a, let's extend that out, resistance coming in on the daily basis at the high of the day today. So that's, we were saying just above the 7,100 level resistance there. Then we see it at 71.22, and after that 71.70. So there's a bit, if FTSE can manage to close a bit higher, then that will look short-term positive. We're back above this previous trend line. If we were to redraw this, potential support coming in as well down around the 68.50 level. But yeah, it's very difficult to argue the case for indices, but they are outperforming, so you can't ignore it. Again, on the DAX, we've had a similar sort of situation. The high from the 23rd of July and the high from today leaves potential for a double top formation, although it is mid-range. So this is the main double top we're looking at here. Are we pushing higher to the 15,800 to get maybe a potential for a treble top, which we'd need a retracement back below 15,000 to confirm something like that. So currently we had a bit of a spike up. 8 o'clock we always get a little bit of price action, had a nice spike up to 15,710. That was a pretty That's the hourly chart. There's a pretty full-on spike there. Just break that down onto a 5-minute basis. You can see sort of like just after 8 o'clock, really quick rally up and a full rejection back down. So really got to see how the price action plays out now around the 15,600 level, but it has sort of like that retracement has stalled. Dow Jones, let's get rid of the 5-minute chart. Dow Jones again, negative day on Friday, but we recovered all those losses and we're back up to the all-time highs, just short of there. All-time high on this chart comes in at 35,176, currently trading about 60 points lower. Nasdaq again coming back quite nicely. The tech sector recovering after last week's fantastic results, but poor price performance. We are grinding our way back up again. All-time high again, potential in, we're just about 3 points shy of it on today's price action. 44.30 we call it, as a nice round number. That's the level to watch in S&Ps. Above that, we just got to stick with it. If we get a pullback below the 4,370, then there may be an opportunity for a deeper correction, but really can't stand in the way of that. Price action in China obviously recovered on Thursday and Friday. We sort of like got a bit of late selling into sort of like trying to get back down to this 14,675 area. And today's price action has been very positive, and we are on our way up. Next level of resistance, 15,700 in the China 50. Nikkei in this descending triangle formation, a little bit of a bearish formation, and but today's price action is positive. So that covers all that off, Joe. Can't really think of anything more to add to that.
No, great start to the week. Thanks, Steve. Okay, on to FX. Okay, so dollar index starting point. We touched last week on how it had broken out of this wedge, which had sparked a corrective move to the downside. We talked that the first level to test on the downside was this 38.2% Fibonacci level at 91.79, and lo and behold, it did a job. So we pretty much touched it to the tick, and then on Friday we saw a decent bit of a bounce back. So a bit weaker today, but clearly some support on offer for the dollar index around about that level. I'm not entirely convinced that the corrective move lower has finished yet, so I'm not ready to jump back in on this on the long side just yet, but certainly does seem to be some support there, and I wouldn't be surprised if we did see another test of that support level in the short term. Below that sort of level I'm really interested in to potentially start going long would be down at the 50% level, which is at 91.36, or this previous swing high here, which should now act as support back in May at 91.43. So in this kind of band here is where I think we might see some stronger buying activity on dollar index. But for now, not really too sure as to which way to play that, to be totally honest. So I think trading opportunities could be quite limited. I think really there is still more chance that we see a continuation lower, but likely to be difficult either way, I think. Euro dollar obviously broken out of the wedge to the upside, the inverse of what we've just spoken about on dollar index. Hasn't managed to make it to the 38.2% fib level yet. On Friday we did see a bit of indecision, no real sort of supportive volume despite it being the end of the month, so not really sure with that one either. I still think there is potential for a continuation on this corrective move up to potentially 119.48 to 1.2009. Which is in between its 38.2% and 50% fib levels. So again, bias mildly bullish, but I think difficult trading conditions either way. Looking at cable, so that rallied to this resistance level that we had on the chart, 139.10. It overshot that. It also took out this short-term downtrend, although it did post a nasty looking reversal type candle. Didn't quite engulf all of the previous day's price action that we saw on Thursday, but interesting nonetheless. Probably invalidated that for now. So we have to wait and see what happens. But it's had a very nice move to the upside. But what you will notice is that even though it has had this move to the upside, the volumes have actually been moving lower. So a bit of divergence there, which may indicate that this will actually run out of steam pretty soon. I mean, on the face of things, on the longer term charts, I think this has completed a double top, and it did so on that move there. But obviously, it's been an aggressive move higher. So maybe what we're doing now is flushing out anybody that got short down here. They've all been stopped out probably on this move above here. And now maybe we'll see a rollover and a move to the downside. Let's have a quick look at the fibs to see if there's anything obvious here. So we've just stopped in front of the 61.8% fib level from the swing highs that were posted on the 1st of June down to these lows on the 20th of July. So maybe that's an indication that the sellers are ready to step back in and maybe send this lower and actually form an even larger top pattern on the daily chart. The Aussie currencies have been not too strong at all. This has completed a head and shoulders top pattern already for me and continues to move lower. So Friday we saw more aggressive selling, big uptick in the volume as well to accompany that. So it looks like lower prices will be seen on that one. So if you are looking to be bullish on the dollar, then this is probably one of the better markets to trade at the moment, selling Aussie and buying dollar. Aussie yen has been quite interesting as well. Big break of the range here. Looks to be continuing lower. We've got a measured move target at 79.16. So we're edging closer to that. Euro sterling, let's have a quick look at what that's doing. Continues to sort of bumble along these lows really. There is some support here that I've got on the chart at 85.11, which seems to be doing a pretty good job. But if that fails to hold and we do get a close below that on the daily chart, then I think a retest of the lows that we posted back in April is very likely. So mixed opportunities, I think, in FX, not anything particularly clear at the moment. But obviously there are opportunities intraday if you are eagle-eyed and yeah, and make sure you obviously use stops because these things feel like they're a bit on the edge and could turn either way. Okay, that's it from the FX side of things.
Thanks, mate. Brilliant.
Gun to the head. We aren't having a good run on this at all at the minute, Steve. Another couple of stop outs last week. I got stopped out on cable. You were stopped out on dollar yen. So we really need to get hold of this and start making some gains. And I guess, just running through those charts a minute ago, there isn't really much volatility. It's a lot of chop in the markets, and therefore that is impacting these intraday calls that we're making.
Yeah, absolutely. Don't really know what to say about it. Really, it's there's nothing. It feels like just jumping in at 9 o'clock or whatever time we do the gun to head trade. It obviously isn't the right process at the moment. It does, we're always saying, oh, I'd like to see it, the price action when it moves to here, or I'd like to sell a rally, or I'd like to sell a break. So yeah, it's just one of those things we go through. It's just the challenge. It's just a bit of fun we have, and it's not working at the moment. Over time it's worked, but it's not working at the moment. So just got to stay disciplined and try and find a winner, baby.
Yeah. We need volatility for these things to work. We've said it time.
Yeah, volatility with a little bit of trend. That's where you sort of like, yeah. But the volatility is definitely key.
Right. So, if I put a gun to your head, Steve, what are you trading right now?
Well, I'm going
to trade. I'm going to trade euro sterling. Sorry.
Okay.
This is the hourly chart. Really short term because we're looking for opportunities that are going to expire ultimately at 9 o'clock. So short term downtrend, long term downtrend as well. Rallied in recent hours towards this resistance line that I've got at 85.46. So that would be the ideal entry, but we don't get ideals in this form of trading. We have a gun to our head and we've got to come up with something. So I'm going to sell this. And it's currently at 85.35. Stop's going to have to be quite tight because otherwise I can't get anything good from a risk reward perspective. So I'm going to sell that there. Going to target a move down to 85.00. with a stop at 85.52. So 2 to 1 on that one. Really sort of scrambling to find anything, to be honest, but that'll have to do.
Okay, mate. I'm struggling. However, I'm looking at Euro New Zealand dollar. Where has that come from? Nobody knows.
I actually like that
Uh,
market. I think it's a pretty good one to trade.
Yeah, I mean, you can see it does have them sort of like spikes in either direction, pretty volatile market. I'm sort of thinking it feels a little bit toppy as it has done on these sort of like daily formations. We get the spike higher and then a retracement. And the only thing I looked at on the 4-hour chart, we've got a bearish engulfing candle forming. I mean, that finishes at 10 o'clock, so potentially that will still be in place. And it does look a little bit like we've formed a bit of a top here, and the hourly candle breaking lower. So I'm going to go with this. I'm going to try and keep it as tight as I can, getting short at 170.15. Let me have the stop. Say we'll have the stop at we'll have a 45 tick stop, and we'll have a 4-to-1 risk reward. Takes us down there. It's a bit punchy, really. It's a 3-to-1 risk reward. Yeah, so targeting 168.80, getting short here at 170.15, stop at 170.60. Could be a little
Nice.
bit more aggressive with that, I
Leave it
suppose.
alone.
Yeah. Okay. Yeah. Good shout. Yeah.
Okay, cool. Good luck, Steve. So, in terms of what's going to move markets today, not a whole lot on the calendar to keep an eye out for. Pretty slow start to the week, to be totally honest. But at 3 p.m., we do have the US ISM manufacturing PMI. The index is expected to fall to 60.5. Later in the week, we will have ADP on Wednesday, which is the precursor to the biggie on Friday, which is the non-farm payroll. So the week will hot up as we go on, but a fairly quiet start, which isn't a bad thing, I don't think, for a Monday morning. So yeah, that's pretty much it from us. Anything else to add, Steve?
No, that's all good. Good luck,
Lovely.
everyone. Stay
Yep,
safe.
indeed. We'll be back tomorrow morning.
Brilliant.
Bye bye.
Cheers.